Welcome back to the Property Frontline. Today I'm here with Grant Schwulst from Loan Market. Hi, Grant. Hello.
Hello.
And so Grant is a specialist mortgage broker, and he's going to help me cover off today's topic, which is that first-time buyer dilemma. Do you go for the range of government grants on offer, or do you skip the grants and buy an investment first? Okay, so to get us started, Grant, tell us a little bit about what you do.
Yeah, sure. So broadly speaking, I've been in finance for just over 25 years. Previous life before becoming a broker, sort of 5.5 years ago, I was in, financial operations within different financial products, and made the decision to obviously become a mortgage broker, during just before the pandemic hit of all times. But, so I mainly specialize in residential lending, and, that can range from this topic of first homeowners to next homeowners, investors, refinancing, consolidating debt, personal loans or asset financing as well. Right? But, so, different product in the last few years, but more than, capable to look at it from a sort of broader financial perspective as well.
Yeah. So you basically help people get money.
Correct. Yeah. So we do we look at we look at the position, and we work out where they're at, and we put them on the track to be able to buy a home and point them based on their circumstances to the correct lender.
Yeah. Okay. Yeah. All right. So let's talk about the range of government assistance on offer, because, if you're a first-time buyer, there is so many choices now. It used to be save for your deposit, go buy. But now there's just so many options, and like the nuances of it all, I think, make it even more challenging than the help they're sort of there to provide. So can you walk us through the main categories of the assistance that first-time buyers can access?
Yeah, sure. So broadly speaking, there are kind of three categories. There's the grant, there's stamp duty exemptions, and then there's the guarantee or the options. Yeah. So with the grant, it's more geared towards a new build or a new property where the government will give you $30,000 to build a new home. With the stamp duty,
that's the Queensland option, though, and like everywhere else in Australia, there's different variations on that.
Different amounts based on, but yeah. So other states would have different amounts, but I'm specifically talking about Queensland in terms of the numbers that I'm using, right? And the other one is stamp duty exemption. So Southeast Queensland, if you buy up to 700,000, the government will waiver any stamp duty that you owe. If you go over 700 to 800,000, and those values would differ as well with different states. You can get a discount from 700 to 800, but after 800, it's normal stamp duty applies, right? And the one that's probably the most popular is or that I see the most in my world is the government guarantee, because this is geared towards lower deposits and more where the government acts as a guarantee or a guarantor to ensure that you don't have to pay the lender's mortgage insurance premium that the banks will charge you for having a lower deposit. So they take away that upfront cost, which is a significant savings. It also has similar price thresholds to the stamp duty, in that you can purchase a property of up to 700,000 with the government guarantee. And then Queensland specifically is bringing out a new one, which is kind of, if you look at the government website, is more around registering the application or interest at the moment, but with the view of it will launch towards the end of the year. And in that one, you can purchase up to $1 million with a lower deposit of 2%, which is quite interesting.
Yeah, interesting.
And
So let's talk about those grants, because a lot of people think that that's cash in hand. And number one, it's not. And
No.
number two, it pushes people to buy property that might not be best for them. So it might be something brand new or not built, right?
Yeah, so like I find the challenges with new build from in my space is tying up to what you said, that some people think that money's towards the deposit or towards the financing of the house. It's not in terms of in the eyes of the banks. It's more geared towards helping that person actually get to pay for the costs that are associated with the build. So it's kind of money that's going straight to the builder in case the build extends, which in a lot of the cases it does. And we've seen since COVID that, building costs have gone up significantly. And, that's kind of why the government's giving that money, is to help people with those expanded or extended costs, right? But the other issue I have on my side is borrow capacity is quite limited now with higher rates, and some people are renting while they're paying for a land loan, and then they're paying for a construction loan as it completes,
Yeah.
and it gets a little bit more challenging to fit into those criteria, into some of these and into some of the metrics around how much they can how much they have to pay for the property, because it kind of overextends. If that makes sense.
Yeah.
Um, okay.
Yeah. Whereas if it's an existing property, you already, like, not only can you touch and feel and check it out, you can move straight in, done. Yeah.
Yeah, so the rent gets cancelled in terms of the way they measure the metrics around borrow capacity. So
Mm.
rent out gets cancelled by mortgage. So you tend to have a little bit more capacity to pay. And established property is probably a better stepping stone in terms of building asset or wealth or equity that would put you in a better position to afford the grant, right? But
Yeah.
what I see with the guarantee is some of the pricing thresholds are now limiting what stock's available, right? So
Yeah.
a standalone house is getting more challenging for those price thresholds, and it's kind of pointing or steering people towards townhouses or units, and whether that fits their personal needs, or or their growing family needs, or whether you want to pay the costs around body corps and stratas, and in an environment where cost of living is such a challenge at the moment. It also opens up some questions around whether it will fit, if that makes sense.
Yeah. And yeah, so when people are trying to decide which way to go, so should they use the grant, go for the grants? Well, you got to buy new property, so maybe not.
Yeah,
Not in every case, but maybe
and
not.
building comes with stress,
Uncertainty,
right?
which
And
equals stress.
uncertainty. Yeah,
Yes.
it's challenging, right?
Yeah, that's right. And then, yeah, so that if you take out the grants, that leaves us with the purchasing assistance and the stamp duty exemptions. And really, like, now it is something that you really do need to work out on paper as to whether, you should go that way, or whether you should just really ditch it and, like, ditch all the grants, all the other assistance on offer, and maybe just go for rent vest. So
Yeah,
what's rent vesting? Number one, it might mean that you're not ever going to access that government assistance,
yeah,
because, once again, not in all cases, but if you don't use it as your first purchase, then you're not going to be able to use it. But it could really be a great option for people to actually get into a rising market. So what are your thoughts on rent vesting first?
I think it's a good idea. It comes down to the circumstances on the individual or the
Yeah.
family. An individual might not be able to afford in the area that they're looking in, so it gives them the option of not letting the market leave them behind, and therefore they can look in an area that is affordable, that is going to grow obviously with the help or the guidance of someone like yourself who can research certain areas of potential growth that are not necessarily just specific to Queensland, they can be nationwide or further uh, beyond, or if you
Yeah.
know what I mean. The other thing is, I see a lot of families, or blended families, people that have gone through a divorce, and they're trying to get back into the market with their new families, and they've kind of got kids, got kids at school. They're established within their lifestyle, and unfortunately, the areas that they are established in, the affordability has escaped them, right? So where they're at with capacity or what they can afford to borrow is not affordable for where they're living. This will allow them to, still get on the market, and use it as an investment and accelerate their asset base or wealth or equity or savings to be able to maybe get in the future, or just to hold it as an investment for as long as they need to.
Yeah, and we were talking earlier and you were saying that depending on the situation, sometimes because people can use the rent from an investment, it can mean that they can increase their borrowing capacity. Is that right?
Yeah, well, you've obviously got rental income coming in, right? And then the bank will use that rental income, but they won't use the full amount of the rental
No,
income because they factor in vacancies and, the fact that it,
costs it.
that sometimes people are maintaining those properties and they don't need they can't have tenants in there. But it allows you to rent and use rental income to buy something somewhere that's more affordable, right?
Yeah,
And also, back to my point earlier, you're not necessarily restrained to just townhouses or units in terms of your affordability. It actually gives you the option to potentially buy a freestanding house in an area that, could be of interest later or could be just purely for an investment purpose, right? I think people just need to see it as a vehicle to create wealth so that you've got better decisions to make or easier decisions financially for the future, right?
yeah, because if people buy the right kind of thing in the right area, they can build up equity and maybe then use that equity to buy a home a little bit further down the track.
Yeah, it's more of a 30-year view rather than a current view, right? And that's a big
I would
mindset
say
challenge I see, yeah?
5 to 10.
Yeah, I'm talking about a loan term, you know what I mean? Yeah, you're right. With the equity, within 3 to 5 years, you'll be in a position to do it. But you're looking at it from over a long period of time, you'll be in a better position, right?
Yeah, better to have property than not do it at all. Yeah.
Correct. Yeah.
Okay. Alrighty. And so how should first time buyers make their decision? What's the best way to do that? Like we have a comparison tool, but it's better that people just come and talk to you.
Yeah. So I suppose our process is to, we want to understand the financial position of the individual or the couple that are, on any form of loan, not just within, obviously this particular like criteria first time owners, but we look at borrow capacity as one of our first things that we look at is how much they can afford, and we also try and identify if there's any problems within their financial position as well, as part of our responsible lending obligations that we have. And the things that I do see in that space is generally helping them work out ways they can budget better to obtain savings. If they're overexposed with debt, I can help them do debt consolidations and put them in a position to reduce the debt that they have and lower the repayments on those, and potentially create more room in the tank to be able to save some money for the deposit. Because as soon as you get to 5%, and maybe in the near future for Queensland specifically, even just 2%,
Yeah.
you're going to be in a position to be able to at least look at your options with those lower deposit amounts. Other problem that I see is obviously if clients have got a credit issue as well, right? So, I can run a credit report, look at what the score is, what the issue is, help them identify what they need to do to rectify that, and then put them in a position where we can take them to a more favorable lender than a sort of non-bank lender. Generally, they'll probably need a little bit more deposit for a non-bank lender, but we can identify that early, and then get on the road or the journey that we need to help them
Yeah.
get in the market, right?
Yeah. So it sounds to me like really individuals shouldn't be trying to make this decision by themselves. They really now need an expert who can run them through, like, this is the scenario if you go down the home purchase path with
Yes.
all of the grants and
Yeah.
government assistance. And this is the other option.
Yeah.
If you buy somewhere that's going to perform well, and then buyers have to think about their own situation, about, whether an investment is a good option for them, or
So you're
whether,
generally probably going to need a little bit more savings for an investment, right? And you're also exposed a little bit if you decide to sell it to capital gains tax. So that's kind of yeah. That's
that,
some of the negatives with that, right? But then, back to the other issues that we've seen on the owner-occupier, you've got a solution to at least getting into the market, right? And if the area that you're in, you can't afford, right?
Yeah. And so what you've covered is a very good point, because if people are thinking, oh, I can buy and sell, that is really not a great option.
No.
So, but that needs to be included into the mix. And when we were doing the analysis for helping our clients to decide whether rent vesting was better or not, in say about 4 or 5 years ago, it was a real clear option. But now, because there is a little bit better government insurance assistance, and the thresholds have been increased a little bit, it is a real option to go down that home buyer path.
Yeah.
So,
I always say to people, just get in, right? If you can find your way to get in, right? And if it means sacrificing your lifestyle for a little bit, then do it, right? Just get the townhouse. It's a little bit, couples or no dependents, a little bit easier to do that, or maybe only just one dependent for a short period of time, to get the townhouse and then get the next, because you do get mindset or attitude like, I've got to get the big house in the beginning, right? And you don't necessarily have to. You just get into the market and then build yourself up over a couple of years, right? It's not a long-term thing.
Yeah, that is also a very, very good point. And the other thing I would say is, don't be just anchored to one location. Like, try and think a little bit more flexibly, because it might only be that you might have to go a kilometre further outside of the radius of where you're looking. And, that might impact school catchments. But if it doesn't, and if you can get into an area that is just about to increase in capital growth, just do a bit more driving. And I have to check my cynicism, because I think the media portrays first-time buyers as wanting, the big, gorgeous 4-bedroom house. But most of the ones I see, they're being very strategic about it. They'll buy something that might need a little bit of work.
Yeah.
So, yeah.
Yeah, be prepared to put a bit of TLC in to get the growth.
Yeah. That's the way we had to do it.
Well, you're right. If it means driving the extra 15 minutes to be in a place that's affordable, then you're going to have to do it, right? And it's not forever. It's not a life sentence. It's a short-term thing, right? And you can turn it into an investment later.
Yeah, just as long as Uber will still deliver, you're fine.
Yeah, all good.
Yeah, okay, all right. And so wrapping up then, so can you give buyers a few tips?
Obviously, come and see me as soon as you can. I'm free, and I don't cost a cent to borrow. The banks pretty much pay me, right? So it's in my best interest to help you as best I can to get paid. So I can obviously do the assessment or the review that I need to assess where you're at. And back to what I said earlier, if there's a problem, we work together to resolve it, right? And if we need to consolidate debt, we do it, or we need to put you in a position to save, we do it. And if you're ready, then we point it towards a lender, and we look at what lenders we can put in the mix. It's not so much about the rate. A lot of people are focused around rates. It's more about solution, right?
Yeah, that's right.
But
it's the message that people should come and see you a little bit earlier than when they would have, expected, say, only 12 months ago. Now, people should be going to see a broker at least 6 months before they think they might be ready.
Yeah, I mean, So at any stage, if you haven't got savings, well, let's work out how you need to get savings. And if you have got the savings, let's see if you're ready to do it, right?
Yeah, okay.
And
that sounds good. And our second tip? So about tracking where their money goes. But
Yeah.
is the second tip track where your money is going. So they've got to like keep track of, where their
Yes.
money
Okay.
is
So I'm
flowing.
with you again. Yeah. So part of this is, if you more around just getting those genuine savings in place, right? We've got to make sure that we're on track to get the savings, right? So, there's relationship calls or me checking in or nurturing to help people make sure that they're on track to to get to where they need to get to. So the little voice of reason, if that makes sense.
Oh yeah.
Yeah.
Okay. Alrighty. And the third one, don't give up.
Don't give up. No, I've seen so many people over the period of time that I've been doing it, and I've helped so many people get into the market. It is possible. We've just got to work towards it, and this conversation should open up the thought process or plant the seed that it doesn't have to be a specific agenda. That there's options, and we can work towards what option is best for you. Right. So my role's not to come up with a specific agenda or to point you towards a specific lender. My role is to help you identify what options are available, and then we work towards the one that you choose to do, right?
Yeah, that's right. Okay.
Yeah,
Alrighty. Well, thanks so much for taking the time, Grant. I
no
really,
problem.
really appreciate it. And to everyone out there, thanks for watching. Grant is available to help you whenever you need help. His details will be included in the description box. And of course, here at the Property Frontline, we also are available to help find property that absolutely meets your criteria. Okay, and so for that, we'll sign off and say goodbye.
Thank you so much, Deborah, for allowing me to come on here and have a chat. And I will say goodbye to everybody. Thank you so much.
Okay.